Regional real estate has been making a lot of headlines recently, with a lot of regional centres close to Australia's capital cities seeing significant activity and growth since the start of the year. I have been talking about regional real estate for a very long time now, and I think now is the perfect time to take a deep dive into the regional real estate market. In today's video, I'll be going over some advantages and disadvantages of the regional real estate markets, why these markets are booming right now, and what is likely to happen going forward. I will also be doing a quick analysis of one of my investment properties in one of these regional centres, just to give you guys a better understanding of what is going on in these markets and the numbers behind these investments. Hey guys, welcome back to the channel. For those that are new here, my name is Zane and I make weekly videos on the topics of personal finance and real estate. So if you find value in this video, do me a huge favor by commenting and consider subscribing for more content just like this. So without further ado, let's get straight into it. Let's start by discussing some of the pros and cons of buying into the regional markets. And to do that, we need to compare it to the alternative, properties in the major markets such as Melbourne and Sydney. The first and most important thing to talk about here is the population and the population projections going forward. I live in Melbourne and my investment property is in Bendigo. So I thought this would be the perfect example to use in our comparison. And after we finish this comparison, we can use the same comparison method and the tools for other comparisons in other cities such as Sydney, Adelaide, Brisbane, or any of the other major markets. As we can see here in this graph, the population of Melbourne is just a tad under 5 million. And according to the United Nations population projections, it will grow steadily over the next 15 years to reach 6 million. And according to the Australian Bureau of Statistics, the population of Melbourne could hit 8.5 million by 2050. This is alongside with significant population growth in all other states under a medium growth projection that suggests Australia could have a population of 42 million by 2026. This is due to a combination of more births, higher life expectancy, and significant migration. Regardless of the reason, all of these people will need housing, suggesting that this is likely to push up real estate prices in the future. Now let's compare that to the regional markets of Greater Bendigo. As we can see in this graph provided by the city of Greater Bendigo, it currently has a population of around 120,000 people and is expected to reach 155,000 people by 2036. If the population data was conclusive, then nobody in their right mind would choose to buy in Bendigo over Melbourne. However, population and population projections only tell part of the story, but not the full picture. And there are other factors that we must consider. Let's continue. Let's talk about vacancy rates. This is one of my favorite indicators to consider when thinking about buying a property in a particular suburb. The reason for this is that a low vacancy rate usually means that there will be more tenants competing for your property. This gives you better options as a landlord, meaning you can choose better quality tenants that will stay for a longer period of time. This will also put upward pressure on your rental income, meaning you are likely to expect higher rental incomes in the coming years. And this also shows that there is a shortage of supply of properties in that particular market. And whenever there's more demand than supply in a particular market, it is definitely a good thing. A vacancy rate of 2 to 3% is the market average. Anything below 2% is excellent, and anything higher than 4% could spell trouble for you in the future. A higher vacancy rate means that you'll be competing with the other landlords for the quality tenants, and this will likely put downward pressure on your rental income. I'm going to pull up some examples for both Melbourne and Bendigo. This is likely to give us a better understanding of the vacancy rates in both of these markets. I'm going to completely avoid Melbourne CBD for now, and as most investors should, it currently has a vacancy rate of more than 11%. Let's move on to the inner city suburb of Prahran, which is one of Melbourne's most expensive and most sought after suburbs. As we can see here, it has a vacancy rate edging 6%, which is extremely high. Now let's go a bit further out to Glen Waverley, which again is one of Melbourne's most sought after suburbs, which has seen significant price growth in the last decade. As we can see here, it has a vacancy rate close to 4%. Now let's take a look at Bendigo. The postcode of Central Bendigo is 3550. And as we can see here, the vacancy rate is very impressive. It currently sits at just 1.3%. And if we look a bit further out to a suburb named Eaglehawk, which is where my investment property is located, we can see an unbelievable vacancy rate of only 0.1%. I understand that the suburbs I've shown don't paint the full picture for Melbourne or Bendigo, and there will be suburbs with much higher vacancy rates and suburbs with much lower vacancy rates. However, it is very evident that overall Bendigo has much better vacancy rates in comparison to Melbourne. And I personally believe this is very important because higher vacancy rates usually means longer vacancies, and in the Melbourne market, that could be very expensive. Now let's talk about employment and income, because in order to purchase property or even rent property, we are going to need income. Obviously, Melbourne is a much bigger market. There's simply more money here, more skills here, more people, and more demand for skilled workers. So obviously there will be much higher paying jobs in Melbourne. The best way to research is to look at data. So let's take a look at the census data from 2016. I know this data is a bit out of date. It was conducted 4 years ago and a lot has changed since then. However, this data is very comprehensive and we can get a rough understanding of what's going on in these markets by studying it. And most importantly, it is free for me and you to access. Another thing to note here is that we will be looking at the Bendigo and Melbourne market as a whole. It will not paint the full picture, as some suburbs will have higher unemployment than others and higher income than others, but it will give us a rough idea of what's going on in each of the markets. I have looked at the census data in great detail and have constructed this graph using that data. If we look at the employment figures of Greater Melbourne and Greater Bendigo, we can see that there are more people working full-time in Melbourne, but the unemployment rate in Bendigo is slightly lower. But overall, both markets have relatively good employment figures. However, if we look at the income figures, we can see that people in Bendigo make significantly less than those who live in Melbourne. The weekly personal income in Melbourne is $673, which is more than 10% higher than the personal income of $604 in Bendigo. And the household income of $1,542 in Melbourne is around 30% higher than that of Bendigo. After looking at the income data for these two markets, it is very obvious that people in Melbourne make much more than its regional counterparts. And this brings us to the final point, the current property prices and rental returns. Let's start with Melbourne. As we can see here, based on the graph provided by the Real Estate Institute of Victoria, Metropolitan Melbourne had a median sale price of $846,000 at the end of the September quarter, and the average rental yield sits at 2.8%, which is actually slightly below the average variable interest rate, meaning that even in the current low interest environment, most properties in Melbourne are still negatively geared. Now, let's take a look at the data for regional Victoria. As we can see in this graph, the median sale price was $443,000 at the end of the September quarter, and the average rental return sits at 4.2%. By looking at this data in more detail, we can see that the average price for Greater Bendigo is actually slightly lower at $403,000, meaning the average property in Melbourne costs more than 110% more than the average property in Bendigo. Based on my personal experience, and as I will demonstrate in my investment property review later in the video, it is perfectly normal to find rental returns exceeding 5% in the regional markets. In fact, my investment property in Bendigo has a rental return of 6.4%, which is more than double the variable interest rate. Okay guys, I just dumped a lot of data on you guys. I know it can be hard to make sense of it all, so let's go over it together. Based on the current data and forecasts, Melbourne has a much bigger population and will see significantly higher rate of population growth in the coming decades. Workers in Melbourne can expect a 10% higher personal income or 30% higher household income. However, properties in Melbourne cost on average 110% more and have a vacancy rate of 100 to 200% higher than its regional counterparts. And on average, we will be able to achieve a rental yield that is 100 to 150% higher in the regional market. In order to make our investment in Melbourne more profitable than our investment in Bendigo, the capital growth in Melbourne needs to be 3 to 4% higher every single year to make up for the lower rental returns. While the population growth in Bendigo is forecasted to be slightly lower than that of Melbourne, it is still enough to generate upward pressure on real estate prices, and the lower vacancy rates in regional Victoria is likely to create upward pressure on rent in the future. Melbourne's higher vacancy rate is likely to lead to downward pressure on rental income in the near future, especially in the current environment. Based on all these factors and numbers, my bet is with regional Victoria. This was the decision I made in 2018 when I chose Bendigo over Melbourne and purchased the property in a suburb called Eaglehawk. Let's take a look at how it has performed since then. This is the property I purchased in January 2018. It is an older 3-bedroom weatherboard house on 1,044 meters. Yes, you heard that correct. It is on a 1/4 acre block. It is 11 minutes from central Bendigo and is around the corner from a major shopping centre, giving it great development potential in the near future. It was purchased for $210,000 in 2018, and just under 3 years later, CommBank had it valued at 247,000, and realestate.com.au has it valued at 242,000. At the price of 244,000, it will give us a growth of around 16% or a return on investment of around 63% based on my 20% deposit and 6% in stamp duty and other settlement fees. And now for the best part, the property currently rents out for $260 per week, giving us a 6.4% rental return, and it has housed the same tenant since purchase, giving us a vacancy rate of 0%. Based on my personal opinion, it will be almost impossible to find a deal like this in Melbourne or Sydney or any of the other major markets. But when I look at regional markets, I come across deals like this on a weekly basis. Due to all the factors and numbers listed above, I personally believe the regional market will likely boom in the coming years, and is likely to outperform the major markets, at least in the short term. This is a trend that is already happening. If we go back to the graph we saw before, the median sale price in metropolitan Melbourne dropped by 1.7% in the September quarter, but the regional market boomed by more than 5% during the same period. So if you are looking to purchase an investment property in the near future, I would strongly recommend you to add these regional markets into your watch list. And with that said, this is definitely not financial advice, and I'm definitely not a financial advisor. I'm just a guy who makes YouTube videos for fun. But if you found value in this video, please do me a huge favor by hitting that like button right there and commenting your thoughts, and consider subscribing for more content just like this. With that said, this brings us to the end of the video. I want to thank you all for watching till the very end. You're awesome, and I'll see all of you guys in the next video.